Hello Wolfpack, I'm back here on Bitcoin today, and I'm going to be looking at the daily chart and the 4-hourly chart here to try and get a look about what's going on right now in the market and why we've had this little bit of a correction. Now, if you don't know my prediction about Bitcoin is we're going to be ending up at the 200-week SMA, which is down in the 20 to 24k region by the time we get there, sometime this year, okay? And I'm leaning towards later in the year in November, but I do take into account the fact that March is going to be a big month for Bitcoin in terms of interest rates, and it could be sooner, okay? So I'm not exactly sure when, but I think we're heading towards a 200-week SMA. And now my invalidation point for that prediction is 48k based off of a variety of reasons. Now, if you want a more in-depth analysis as to why I think that, go ahead and check out my last Bitcoin video, just the previous one on my channel. I explained it all within about 5 minutes from the start of the video, and then come back here. But if you don't want to see that, just go with it, right? So 48k is my invalidation point. At 48k, I will be considering, I won't be bullish, but I'll be considering being bullish again, and 200-week SMA is my prediction. Well, now on Bitcoin, what we've seen is, what I think we're seeing at least, is a long-term, not a long-term, but a relatively medium-term ascending wedge formation, which is a bearish formation, all right? That is a formation that kind of suggests exhaustion in the market, and then what we've actually seen is an uptrending line kind of leading into that wedge. So we've had two tests of the top of the wedge, two tests at the bottom of the wedge, and we've just dropped down and rejected from the top, and so a test at the bottom would be logical, but it doesn't really need to happen. Now, the reason why I'm not 100% sure about what the next very immediate move is for Bitcoin is because, well, we have a bit of a line in the sand here to watch, and that line of the sand is coming from the 50-day SMA, this red line here, which was very clearly held for support on the last daily candle close. Now, this thing is heading downwards quite quickly, and so dropping below this is going to be quite a task for Bitcoin, but I think it will happen. Ultimately, what I'm looking at for the 50-day SMA is a drop below on Bitcoin. What we need to be dropping below is a drop below around 42,000 and possibly even below 41,800, seeing as it's moving downwards at quite a big trajectory. So if we drop below that, I would argue that the next area of support is around 40k on Bitcoin, and that's going to be coming in for a test of the bottom of the wedge. And I would not be surprised at all on Bitcoin if we come back up and we retest this higher region at 45 to 46k, and I also wouldn't even be surprised if we break up briefly and see a fake out to 48k before rejecting downwards. In fact, that was a prediction I made on Twitter. Now, I'm not confident enough in that prediction at the moment to actually make any trades based off of it, just because of the fact that there's no TA to really represent that happening or support that happening, but there are a few fractals from previous times that I looked at yesterday in the first 5 minutes of that video to kind of suggest that would happen. So basically what I'm saying is that, well, I would not be surprised here at all if we see one more upside swing on Bitcoin up to 48k or potentially maybe a little bit lower before rejecting downwards back into the downwards trend. But until that point, we need to be finding the short-term bottom, and as I said, that could be coming from this 50-day SMA, which could be coming like right now. We could be bottoming out, or we could be falling all the way down to 40k. Now, what's worth noticing is that this entire upwards trend since January 23rd has been very, very weak, and we can see that via the volume. Now, the volume has been trending downwards, as you can see in the bottom of the screen here, but volume has been trending downwards quite significantly throughout this upwards trend, which suggests exhaustion in the market. We've also seen bearish divergence on the 4-hourly chart and the hourly chart, which kind of suggests as well, people are getting exhausted, the buying is becoming less interesting, and as you'll notice here, as we approach higher and higher towards the top, our short-term local top, the wicks to the upside have been getting longer and longer, and the closes have been getting lower in the candles, which represents, as I said, exhaustion and a kind of an unwillingness of people to just buy in general into this market. So what it kind of suggests is that, well, people aren't willing to buy this high. You know, we might see one more impulse, and that might come based off the fact that, well, we could argue we have an inverted head and shoulders pattern here, and something like that could happen. But ultimately, I think that when the Federal Reserve does raise those interest rates in March, and when this Russia news gets into a kick, you know, Russia and Ukraine are debatably going to war. I don't think it's going to happen personally, but, you know, that's definitely a strain on the market, and resolution for that might not come, you know, for months potentially, but, you know, that Biden and Putin do have a phone call on Sunday, which could resolve some things, but Sunday is a decent amount of time away. I mean, we're looking at the current day today, and we're in a bit of a critical spot in the market in which, well, anything can happen until Sunday, you know, especially if you're taking US time. That's like 48 hours away. You know, anything can happen in that point in time in the financial market. But I think that ultimately what we're going to be seeing for Bitcoin is you know, I'd say there's probably a 50-50 chance we bottom out on the 50-day or come down to 40k, but ultimately I don't think that matters on a longer term scale, because I think that we are due for one more bounce to the upside here on Bitcoin. Now, but the point is that doesn't change my long-term prediction, right? My long-term prediction is still trending downwards. I think that this structure, regardless of what happens next, regardless of if we come down and then go back up, the structure is bearish. Ascending wedge formation as a whole is bearish. We've never seen a dead cat bounce on Bitcoin. Or sorry, we've never seen a bounce on Bitcoin after a downwards trend that leads to a new uptrend when seeing a descending volume. And we're seeing descending volume right now. And you can go back in the charts right now, go back to 2018. Every single dead cat bounce we saw was with a descending volume. And we saw 5 of 6 of them, right? 5 or 6 dead cat bounces. And so far, we've seen a few as well. We saw one up here, and we had a descending volume in a very similar fashion. So there simply is not the evidence right now to be bullish in the market that I'm seeing. We've seen a rejection off the top of the Ichimoku cloud as well. And we've seen almost a rejection off the top of the bull market support band coming through as well. There's simply just too much overhead resistance and a decent amount of underhead support or underfoot support, whatever you'd call it. But ultimately, I don't think it's going to be strong enough to kind of counteract that. Now, we saw a bearish divergence here on the RSI, as you can see very clearly, and we saw a bearish MACD cross at the same time. We've also seen a bottoming out in stochastic RSI, but that really means nothing when it comes down to the 4-hourly chart. Now, if we go back to the daily chart, I just flicked off of it quickly. What we can see in regards to stochastic RSI, which actually does mean something here, is that, well, we're seeing that the stochastic RSI is seeing a top formation, and stochastic RSI is very, very, very hit or miss, as you guys would know, but ultimately it is pretty accurate, right? We've seen a top here, and ultimately we dumped straight after seeing that top. We saw a top over here, and we saw a drop after seeing that top. We saw a top over here, and we saw a drop after seeing that. Top here, drop immediately after seeing that. Top here, drop immediately after seeing that. A top here, and a drop immediately after seeing that. Now, 2 or 3 of those are a little bit debatable, but the point is every time we see a top, or at least historically back from September, and I know it doesn't play out every single time. Sometimes we see tops and we just keep going up, but every time we do see a top historically from September, it has played out pretty accurately, and we do end up going downwards. Now, you could debate that this is already irrelevant because we saw a top here and we still went upwards, so that's an argument you could be making, but I would argue that, well, you know, the only reason we went upwards here and that one green candle was due to a job report from the USA that led to a price pump due to a news event. It wasn't actually natural price action. And so I would still argue that stochastic RSI is still relevant in this region. But ultimately, I'm just making this video, not really too much useful content in this video, but it's just a quick update, just showing my opinions in the market and just to kind of outline what I've said in this video. I think that we could either bottom out right here, go down to 40k. It's not really going to change the scenario either way. I think that as long as we're above 40k, we're going to see a swing up to around the 48k, possibly 47k region before a rejection and then a swing back down, and then we'll start seeing lower lows again. But if we drop below 40k, we lose 40k, that's just going to be a sign that, well, we're just going to see lower lows starting from that point. But ultimately, I do have my eyes on March 15th. As you can see, I've got a dotted line here, vertical dotted line, showing where March 15th is. That is the day when the Federal Reserve is going to raise those interest rates. Most likely, it's not certain, but it's most likely, and that's the day when I'm going to expect some volatile reactions from the markets. I have had some people previously tell me that, hey, I you know, it's priced in already. It's priced in. I just simply don't agree with that rhetoric. I simply don't agree with it. You know, are you saying that interest rates being risen from, you know, pretty much historical lows, not really historical lows, but massive lows, has led to a price in of 8% on the S&P 500? You know, it's not really a big price in, is it? And when you look at the DJI, sorry, are you saying that this massive news event when inflation is running rampant, people can barely afford food these days, 6% is priced in? I think it's still got some more to go. Whether it happens before the day they raise rates or not is up for interpretation. But as of right now, I still think we will see some more blood in traditional markets. The DXY is pumping kind of massively here. It's going up at a rapid rate and it's coming up in resistance right now, but I think we'll be able to break through that. That's going to be bearish for Bitcoin as well. And then you've got the Russian news, and you've got a variety of other things going on in the world, that all of which I don't think is good for Bitcoin. I don't think Bitcoin is setting up for a massive recovery to all-time highs. I think that at the best, we should be cautious and observing, right? Being bullish here seems a little bit illogical to me, but I don't know. I've outlined that pretty clearly in my other videos and on Twitter as well. And if you disagree with me, please let me know in the comment section below. Thanks for watching, guys. I hope you enjoyed. Sorry for not too much new information coming through in this video, but if you haven't watched my videos before, go ahead and watch my last video on Bitcoin. I go over my prediction. There's just really not too much to update here for Bitcoin because we're just kind of in this ascending wedge formation, and we're just waiting to see what happens in regards to a bottom. if we drop below that 40k region, we can pretty much consider it going straight back to 33. If we remain above 40k or remain within this wedge, well, we're probably going to see one more swing up to the upside. It's just as simple as that, really. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video.